I think we're live. Yeah. I think we're live. The broadcast works. Yes.
All right.
Okay. All right. Yeah. Hello, everyone. Hello, Kevin. I think not so many people from our audience and from our followers known you before, and they probably some of them even didn't know that we invested in the company that you founded. That's why we decided to today come up together and have this broadcast to learn more about yourself, to learn more about what you're building, and to see like what are the main milestones, what is coming next for a project. And here we go. Today with us at Morningstar Ventures profile, we have Kevin, founder of ETHGas. And I want to start with an introductory question before we dive into the project. Can you share a bit more about your background and how you ended up working in this intersection of Ethereum ecosystem, DeFi, and crypto infrastructure?
Yeah, for sure. And Peter, thanks for having me. And good evening from Asia, where it's not too late, but almost bedtime. So yeah, my name's Kevin. I'm founder of ETHGas, and for my background, before I got into this, I was in TradFi for a number of years. I spent 10 plus, perhaps about 12 years in finance as a vol trader, as an option trader on the FX side, then interest rates, then on credit, and then structured credit. And then I had the pleasure or perhaps displeasure of working through a GFC in like '08, where kind of the world kind of like blew up, and or at least we thought it did within the financial world. And then just through that experience, I got to learn a lot about the ins and outs of how the broader financial system worked. And after '08 and the years that followed, I was like, I'm getting out of banking. I'm never coming into this space. Like, I need to get away from finance altogether. It was super stressful. So I was like, okay, I'm gone. And then started a tech company, and it's like, oh, tech is great because you're always talking about like creating something new, and it's about like almost like pure innovation within the tech world. Whereas, of course, in banking, it's just like a lot of it is like taking other people's pie, right? And taking like the pie is only so big, right? And so it's like it's great, it's a lot more optimistic and forward looking. So I was in tech for a number of years, but then, of course, this is like a bit more than 10 years ago, kind of give or take. And, that's the early days of like Bitcoin and crypto. And so, being in Asia, of course, like it was quite a hotbed, for a lot of early crypto activity. In Hong Kong, where I am right now, there's a lot of like, early meetups and like Ethereum, like many of the Ethereum, like OG and like seed investors are out here as well. But again, I was like, no, I'm not going to get into that world. But anyway, a long story short, when I kind of like put that like finance brain back on, and I was looking at crypto, it had me looking at, I guess, the very fabric of blockchains. And so on the one hand,
how did you first time heard about crypto? Like from this banking, so you have like 3 chapters, like firstly financial, then tech,
banking, then tech, and then crypto. Yeah, well, I was mining in 2010 with a buddy.
Wow.
It's just one of those like, hey, what's this thing? Like, oh, you mean you can just mine it, you get some Bitcoin? And so like, we had we had this side business that we were running, and we had a bunch of excess like CPU capacity. It was and so we're like, well, when we're not using it, let's just put these 96 CPUs to use. And lo and behold, like the office was getting really hot. It's already hot in Hong Kong, but then like you're burning through these CPUs. And then I just got distracted. Again, I'm at that point I'm running a tech company, but then it was just through that story where it's like I just kept coming back, like all my friends from finance were getting into fintech, which was crypto at the time. A bunch of buddies were early, first 5 employees at most of the big exchanges out there. And then it just kept beckoning me. But it was really only until like smart contracts had really taken off and like DeFi summer came around, where it's like, okay, like I wasn't so much a um, like a core protocol developer, so to speak. It was more like building like the application layer, and so you kind of need some of the infrastructure to be in place before you start to think of applications and products. And so anyway, but then yeah, it kind of fast forward, then it was this idea that like, well, crypto, like how do blockchains work, right? And I just kind of like dove into like that incentive mechanism. And there's Ethereum kind of pre proof of stake, and then currently proof of stake. And then one of the things I've just always wanted to do was just create like a commodities market for block space itself. And so that was this like overall goal. And so of course on the Bitcoin side, there's like hash rate futures type of thing. But I don't know. I think I was just called to the Ethereum ecosystem because of like the ability to build different types of products, and I almost think of it like a
And since
supranational,
then
like it's
you
like its
were
own
like,
economy.
and since then you're active user, builder, developer. Did you develop yourself as a coder or not?
No, 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 not myself. I am a poor coder, and it has to do with like back in banking, like being in derivatives, and like everyone around you is like a math Olympiad like contestant or winner or whatever, right? So you'd have like the number one guy in China, the number one guy in Singapore or the US or even Puerto Rico, one of my colleagues. But then you'd have like the global winner. So it's like you have all these incredibly smart guys. And so it's like, okay, my core competency is not clearly on like the coding and the engineering side. It's always kind of been on the product side. So I came in more as just like a user. Um, Back when gas fees were ridiculous, I guess. I mean, like user
Task
like
Force,
decade ago,
DeFi
but yeah,
Signer.
it's just like what is this stuff? It's ridiculous. Like here we are trying to put a trade through, and like 10% of it is gas fees. Like how does that work? And so it just something in my head was like, okay,
Yeah.
the vision of Ethereum challenging TradFi, like I get it conceptually, but this gas stuff is going to hold it back. And then as I kind of just dove into it deeper, it's like, well, like, like that's true. And so like it is the very kind of fabric that powers the blockchains. And so like I really just want to
I think
innovate in that space.
I think here we coming very organically to our next question that I wanted to ask, that
Yeah.
for our viewers and our community who using Ethereum every day but don't always think about it so deeply, how like
Yep.
you went very deep with this. Why is gas so crucial for Ethereum economy, and how does it impact both users on one side, on developers? With users it's pretty clear, it's fees, it's commissions, but for people who are in crypto, but they still think that, yeah, this is some commissions that go into the blockchain. We have like very generic understanding of gas, and why is it important, and why it's actually expensive, why sometimes it's cheaper. We just like know about this as a fact, as a matter, that you have to have some ETH on your wallet, but without like going very
Yes,
deep
without
into
ETH, you can't do anything. And how do you get it? It's so frustrating. So for sure. So the user experience is really weird. And there's a couple things I'll get at. One is largely like, well, I'll define gas in a second here. But then there's largely the paying gas fees and creating new products within the gas market. And I kind of just want to distinguish between the two. And so uh, at a high level, gas is it's the incentive mechanism between the two sides of the blockchain. You have the validators on one side who are running infrastructure. They need to propose blocks. They need to attest and basically like add the next block to the chain itself. But then, of course, you have users on the other side, which are looking to put transactions through or like lend, stake, trade, whatever it might be. And so these traders are effectively using like compute and storage on this other supply side. And so gas is this fabric that kind of like keeps the two aligned. And so that's kind of like what the space is. Now, in terms of like how it affects users, it's two parts. So one is like, hey, gas is expensive, like it's up and down, like this sucks, right? And so like is it like $1 to do this or $5? And after you've already figured out what it is you want to do, it's frustrating to have to think about something else. It's almost like when you go to a restaurant and you pay for your bill and there's like a tip machine and you're like, oh, it's so frustrating, the tip, like it's just a horrible UX from that perspective. So we're doing two things in this arena. Maybe I'll kind of jump into that. But on the one side, it's uh, Okay, actually, let me skip the other side as well. So I'll talk about the product suite as well. So gas itself enables people
No,
to
you
put
can like
transactions.
now we understand on like you gave pretty clear explanation and very good analogy with the tip machine. I like it, but I
Okay.
think it's even imagine you go to the restaurant and you first have to pay tips and then you have to pay the bill. I think it's also quite
Well,
an
yeah. So on that side of the equation, it's like like having to pay gas sucks and the volatility sucks. And so the solution we have in place there is we're just going to remove gas from like the user experience. And so very shortly, we're kicking off this initiative with about a dozen of the largest protocols on Ethereum who will just pay gas for you. So you can go there, you could trade, stake, lend, restake, whatever else it is you want to do. And you'll have to actually pay gas. But what'll happen is at the end of the month, you'll get that gas back as a rebate. And so the point is that as a community, we want to remove the friction from that process, right? We want people to just like when they want to trade, just hit the trade button. Who cares about gas price, right? Or when you want to stake, just stake. Who cares about gas price? You just want them to hit that button, and that's the goal there. And so that is an ecosystem wide initiative that we're spearheading to really just get all the major protocols to pay gas. And so we're kicking that off very shortly. It's going to be huge. That will literally touch the largest number of users ever, I think. at least on Ethereum, because again, if we have a dozen protocols, it's a dozen of those protocols users, and that's just day one. So that's one part of what we're doing, and maybe we can come back to it. But within the gas markets as well, you also have 12-second block times. Ethereum, it's so slow, right? And so what we can do is we can actually take this block space and cut it up into little mini blocks or little pieces, and we can basically say, whenever someone kind of comes to the door, if they want to do a transaction, we can give them these like instant confirmations or what we call pre-confirmations. And basically, instead of having to hit the button and wait for that 12 seconds to pass, we can tell you like, oh, you've traded at 2.1 second, boom, you're done. Or you're going to transfer at 2.5, like, boom, you're done. And that is awesome because now that creates like a real-time experience. So as I said, there's two parts.
It actually creates for like not very tech users, as for example, most of the people who just like make transactions. It just creates a behind the scenes market for everything what is happening on ETH, basically. Not
Exactly.
behind the scenes, but for people who don't look at the block explorer, for them it creates something very, very unusual.
Absolutely. So to my earlier example on like getting gas rebates, the way we think of it conceptually is that like when you again like let's say you're going to buy a coffee, right? It's $5 for argument's sake, and it's just supposed to be $5. It's not supposed to be 5.05 or 5.5 or whatever. It's just $5. But the thing is, as a user, you know that there is like the price of beans and the price of electricity and heating, and there's all these other things in the background, right? And that's what gas is. Gas is really like an industrial input. Like we know it's there, but we just want it to be handled in the background. And so that's kind of the user experience that we're going for on that side. So it's just like what you see is what you get. When you trade, you can just trade. But anyway, we'll see. Yeah.
And how does it work? Like very briefly under the hood, not for devs. You also said that you're poor dev. So, but conceptually and high level, like what did you implement to the core Ethereum infrastructure to make it happen for users and for developers? Can you walk us through your tech?
Sure. So on the infrastructure side, there are I don't know what Ethereum price is right now, actually, on my screens, but let's say Ethereum as a whole is worth like 400 billion or 500 billion, right? All the validators, the people that are staking their ETH, they're the ones who are actually like powering the blockchain right now. And there's about 150 billion dollars, give or take, of validators. We basically went out to like 90% of them, maybe 85% of them, and said like, hey guys, why don't you sell your block space in advance through our marketplace? And we're not on board with all 80-90%, right? So we're starting off small. But basically the idea is that for a validator, if they could sell their block space in advance through us, then we could almost like resell it, You know what I mean? We can intermediate it and sell it to people who want to buy that block space in advance. And the people who want to buy that block space in advance could be like block builders. It could be wallets who want to kind of like reserve capacity for their users. It could be like dexes. It could be like searchers or institutional traders who want to like guarantee that they can get in these slots. But that's what we've done. We've said to the validators like, hey, instead of just creating blocks on demand, why not sell your block space in advance? We will then package it in different ways for these end users. And so that is the core infrastructure that we're providing. And that enables us to not just have like vanilla gas markets, but just different products. So as I said, one product is like real-time execution. You can get like an instant confirmation. Another product is like you could buy the entire block. Like if you wanted, you could just buy a block of gas, and if there's like an NFT mint or something, you could control the entire block, and you can be like the first one to kind of get that NFT, and so that gives you a lot of control. But again, it's about getting the block space and packaging it in a way that enhances the user experience for all the different types of users on Ethereum.
So to simplify, now anyone could come to ETHGas product and buy block space through you to have any type of transaction, any type of on-chain action, 100% processed within the block that they bought, correct?
Hypothetically, yes. If you know how to code. So as we go to market, the first set of users are more like institutional users, like your equivalent to like high frequency traders or searchers, or like broadly the programmatic or those types of traders. The everyday user doesn't really buy block space. What you do is you trade, you stake, you lend, you borrow, and that's done through the wallets. So the way the retail person would access us is really through the wallets. And so we're working with wallets to integrate this functionality into their into the wallet experience. And so basically on MetaMask, for example, you're gonna sign a transaction, and the goal is for you to not wait 12 seconds to see if it's gonna kind of go through or not. You'll just get that instant confirmation. And so that's
for example,
the user experience.
Right now, I think not so many things are happening on chain so hot. It's not so many NFT mints or ICOs where you have to be super fast. But for example, Plasma, I guess you heard about the Plasma ICO that went completely crazy, and people were depositing like tens of millions of dollars and spending like thousands of dollars on gas. And using ETHGas, for example, myself, if I want to deposit some money into Plasma, I can not just speed up my transaction, but guarantee that these transactions will go through and land on the Plasma account to be deposited into their smart contract.
Exactly. So I mean, we're not on Plasma, but in that case, that's the user experience.
On ETH,
exactly.
Exactly.
That's exactly the user experience, right? It's like gas fees are high. I don't know if I can get this transaction through. Like, is it going to happen? I don't know. And the whole point is just certainty. So that's what we provide on Ethereum. It's like that certainty, like, yes, this will absolutely go through in this block, or yes, I will absolutely be able to land this complex trade at the top of the block, or whatever it might be. That's exactly what we're going for. And so we're starting with Ethereum, and how do we branch out more broadly? We'll see. There's a lot of chains.
Yeah, 100%. And how many validators do you have right now? I mean, how many blocks, if I can say this, do you sell per minute or per second? How many, like, how big is the market for you right now? And have you ever tried to like make market research and calculate how big it could be? Because it's, again, for retail perspective, for like average consumer, like even advanced consumer in crypto, it's very behind the scenes market. That's why, and you're tapping very specifically into this niche. And I want to hear from you, from the first person, like how can you evaluate this market?
Yeah. So the update as of today is we have about a few percent of Ethereum that is real time. So as I said, we know and have spoken to 85% of Ethereum, of the validators, but only 3% is live today. We just went live as a platform just like a month and a half ago, but yeah. So we have a few percent today. Of that few percent, they control about 25%. And most of them have given us the green light to just onboard the rest of their validators. So we will be quickly moving up to 10, 15, 20% threshold. The higher we move, the larger percent of the network we move, the more percent of blocks will be able to create that real-time experience. Because of course, if we have like say 1% of the blocks, it doesn't make sense if only 1% of the blocks are real time. But as we get to 20, 30, 50%, like, hey, that'd be great. And so there's this like network effect that really kicks in where the more people that opt in, the more activity, more transactions, the better execution the entire thing becomes. And so absolutely looking forward to that happening. And I see no signs of it not happening, given a whole bunch of people are indeed onboarding with us right now.
Awesome. And yeah, on the B2B side, we understand that these like high frequency traders or like institutional investors, traders can work with you and buying this block space like in the real time. On the average consumer side, you will be integrated with the wallet, and you will have access to ETHGas services through the wallet. And is there any other ways how people can interact with the platform?
Yes. So we have kind of like there's two parts. So one is the block space market and our ability to create real-time transactions. And as I said earlier, we need to interface with like the wallets, for example, from a retail perspective, right? The other side of what we're doing is this gas rebate initiative, and that's super simple. I guess we're not announcing it kind of officially yet, but when we do, basically. There'll be a dozen, probably more protocols when we actually launch this thing that will just sponsor your gas fees. So all you'd have to do is continue to use Ethereum, and then at the end of the month, come to us, click the rebate. But you have to connect your wallet. Connect your wallet, and then just claim your rebate of gas for the last month, and that will be like the best thing ever, I think. Right? Like, so if you're naturally just like
everyone
trading here, doing stuff here, you would
banks, from fintech services. So why don't we have cashback for gas? That's awesome.
Exactly, right. And so like, so that's the point. Like, yeah, like obviously your protocol has to be opted in for this initiative. And so if you're an everyday person, then tell the protocols that you interact with, like, hey, I don't want to pay gas. Like, can you guys pay it for me? And the protocol can then sign up with us. We have this like admin dashboard. It's super simple for the protocols to sign up with us. But tell the protocol to sign up with us, and then we'll get them basically paying for your gas fees once at the end of the month. It's quite expensive to do it on a transaction by transaction basis. That actually uses up more gas. So for that reason, we do it on a monthly basis, where basically it's like, hey, Peter, you have some protocol. And it's like, oh, Peter, your user spent like $10,000 this month. So you transfer that 10,000 to me, and a bunch of other protocols will do the same thing. And on the other side, the users will just come and say like rebate, and then boom, whatever protocols they did, however many transactions, whatever their gas fee, it goes back to them in a single transaction. It couldn't be simpler. So that's how retail can literally like interact with us. It's
Yeah.
Awesome. I mean, is it free money? I don't know. It's not free money, but I mean, like, it's
not a zero-sum game because protocols are sponsoring the gas, correct?
Exactly, right? So I mean, as I said, if you're paying $5 for that coffee or transaction, and you need to pay 10 cents more for the gas or 15 cents or whatever, the protocol is going to end up paying for that, but then they're just going to bake it into their fee, right? So whatever transaction fee you're going to pay, it might go up very slightly, but the point is you don't need to think about it. And so to start, then yes, you'll need to come to us every month. Just hit the button, get your gas fees back. If it's too small, like $1, don't bother. Wait until next month, or some months later. But the whole point is to set up the rails and get enough critical mass for these for the protocols to come on board. And so maybe I have some numbers for you here on that front. We have when we roll out, it looks like we will be touching about 80,000 users. I guess are we announcing this here? Yeah, I guess there'll be about 80,000 users on Ethereum that will be eligible.
We speak about real users who spend money on DeFi protocols.
Yeah, correct. 80,000 users who are using these protocols today will get rebates. That's huge.
That's great. Yeah, we're looking forward to have it live, and I can't wait to go to your website and get some cashback for all the stuff that I'm doing on chain personally.
Spread the word. Spread the word.
Yeah, 100%. And you know that a lot of talks right now are happening around ETH, especially with like stuff changing in the Ethereum Foundation, with Ethereum price action, especially in the last couple of months, with a lot of like
For sure.
technical upgrades and Ethereum being actually cheaper. At least I noticed it, and being faster, I noticed it. And of course, a lot of talks are about L2s, and many people have a shared thesis that Ethereum L1 will become a settlement layer at some point, and all the transactions, all the real action will slowly move towards L2s because of distribution, because of scalability, because of speed, and any other reasons, or because of apps that are building on L2s. So how does ETHGas fit in place with the entire movement from L1s of L2s? Is it going to be the same strategy for L2s, or you will stick to Ethereum, or users already can somehow interact with like batch transactions that are being executed on L1? So it would be great to understand this.
For sure. So L2s offer like unlimited scalability to the security that Ethereum L1 that the Ethereum L1 offers. And so again, you get that unlimited scalability, but the analogy I kind of think about is almost like let's come back to that coffee example, right? Like, you know, if you're gonna buy, it's like you can buy a coffee downtown and pay $5 for it, but if you're in the suburbs, like an L2, you know, you're going to get like a cheaper coffee. Maybe it's like $3.50 or something like that, right? And so it's a matter of like, where do you want to interact? And so the liquidity and the depth will still be there on L1, but you know, some of the altcoins and taking into account the gas fees, you know, it might be cheaper on L2. So we'll see how that dynamic evolves. What's been interesting on the Ethereum side and their roadmap for scaling is that there's a fellow named Justin Drake on the research side, and he's spearheading this initiative of the next iteration of Ethereum called the Beam chain. And basically, the goal there is to have like 1,000 times more gas or like throughput. And so scaling, so we can scale Ethereum community by using L2s, but it doesn't mean that the L1 itself shouldn't address scaling itself. So this is about scaling the L1. And when you scale the L1, there's two parts to it. One is latency, and the other is throughput. So on the latency side, that's the block times. And so the foundation is trying to shrink it from 12 seconds to 2 or maybe even 1. But for anything faster, there's us, right? So we are a critical part of the latency, or kind of like the block time of Ethereum. But then there's the throughput side. Like for a block right now on Ethereum, you can't put like 10,000 trades through in a single block. It gets jammed after like a few hundred trades. So even if we could do it like a trade every millisecond, 300 milliseconds, like the block is filled. So that's where based rollups come into play. And based rollups are part of the L2 kind of roadmap. And so when you combine based rollups with the L1, you have you know, much faster experience, but now you have more throughput with the based rollups. And so there's a huge number of infrastructure players and builders tackling these problems. There's a lot of integration work there. But what's happening is that we're all starting to see like the light at the end of the tunnel there. And that's like the L1 itself being, you know, again, much faster and having more throughput. And then alongside that is what you started or touched on earlier, which is like, hey, Ethereum's coming back. For a while, it was kind of like quiet, and is Solana taking over. Solana's great, right? But like Ethereum just has it's the OG. It is so diversified and is less prone to attack. And so because of that, then Wall Street is thinking like, oh, if we're going to move on chain, where are we going to go? And so that's in this environment, you have the technology scaling rapidly through builders like us and others. But then you also have Wall Street looking at Ethereum as well. And when you put these two together, it'll just catalyze investment into the infrastructure and scaling space. That will come back to ETH as an asset. You know, there's a whole bunch of stuff kind of going on. But yeah, that's kind of how I see the interaction between today's L2s and the L1. And I think the future roadmap for L2 and L1 interaction as well.
Cool. Thanks for the so quick breakdown into the latest development in Ethereum L2 roadmap, Ethereum roadmap on the L2s. And you, as a builder and contributor to the Ethereum L1 ecosystem, I would like to ask for your honest opinion. And are you happy with all the things that are happening around ETH1, all the changes, the direction where things are moving on? And as you said, Ethereum L1 being a home for the Wall Street going on chain. Do you share this thesis, or you think it's a bit overvalued? And how do you feel about the Ethereum situation right now, opposite to like 6 months, 12 months before?
I mean, I could not be more bullish. Yeah, I mean, like from my vantage point, there's let's say there's two chapters of Ethereum. Kind of like pre the latest leadership, and kind of like the current leadership, right? Previously, it's very much focused on the technology itself, and the builders, the developers, the foundation, they in some sense don't care about Wall Street, and I think that's good, because you're building for the most like robust and secure solution, and you're not being influenced by like money right away. And so I think that ends up building a better product. Although it may come across as a little arrogant, or like, hey, Wall Street, I don't care about you. But where we are now, it's that a lot of these concerns have been addressed, or we can address them. We just need to address the scalability part of it now. And so I think a lot of the main foundation has been put in place in terms of like creating a sufficiently broad and decentralized validator set, in terms of having different software that the validators run, so there's like no single point of failure. A lot of this has been like addressed. A couple of things we still need to work on, but I think it's time that with the new leadership, that we do start focusing on like real world applications and actually challenging our TradFi counterparts. Like it just wasn't possible before. There was just too much work to be done. But I think right now the technology has caught up to where, I mean, we're doing real-time Ethereum on our side, right? So like if you can make Ethereum real-time, like that's exciting. And so again, the base roll-up roadmap is exciting, and Wall Street is threatened, but also excited to come on board as well. So
So
yeah,
you
I
feel that
couldn't be more bullish.
finally technology and business approach came together at the right time, and it probably was
Correct.
very smooth and right transition from like previous leadership to the new leadership in the right time. Because for example, if it happened like 1 year ago or 2 years ago, or during the gas wars, probably it would be too early to speak about the business and about bringing billions and billions of real world assets on chain into Ethereum L1.
Yeah, it's almost like when building a tech company, there's potentially like two approaches. One is like you like iterate fast, iterate quickly, and wait for your product to stick, like kind of creating these MVPs. And the other is like deep tech, where you're not listening to the thousands of people out there. You have this vision, and you need to just like build it, and then like when it's ready, it's going to be like incredibly strong and robust. And Ethereum is really that latter approach, where we're not going to get swayed by like this person's perspective and everyone else in the meantime. We need to execute sufficiently on our long-term vision. And then once we've hit that sufficient threshold, then it's like, okay, now we're open for more feedback and more interaction. I think we're right at that inflection point right now.
Yeah, 100%. And which approach of building tech company do you follow with ETHGas? I couldn't avoid this question.
Oh goodness. We started on that latter side, where there's this vision that we have, and we're still executing on it, but it is to build out block space markets. And when you build out block space markets, you can create, as I said, different types of products. And there's other products we do want to create. But what this sets the stage for is something outside of infrastructure. It's something outside of like, of the present day Ethereum. And that is like global macro trading, or the global macro audience. And so the position I have on that is that Ethereum as a whole is like an economy that only has like, I don't know if you want to call it like a stock market. There's a bunch of people trading tokens that go up and down. So it's quite like single factor in nature from a financial perspective, and you can't really hedge them. And Ethereum doesn't really have like a yield curve, like a native yield curve itself. And so what we're building is if validators sell block space in advance, we're actually creating the foundation for a crypto native yield curve. And what that means is, well, it's the first time for any blockchain we're actually having a native yield curve. But coming back to the financial markets, you have like equity markets and you have fixed income markets. The fixed income is far more institutional and much bigger than your equity markets. That institutional market, the sovereign wealth funds, the pension funds, the insurance companies, they can't yet participate in Ethereum until we create a fixed rate foundation or a fixed rate environment for it. Because it's my belief that into the future you have like you have different sovereign nations with their currencies and bond markets and interest rates. You have like supranational, or you have like the European Union with their many countries, right? Ethereum will be like an economy in and of itself, without a physical presence, right? But it'll be an economy of itself, and people will be trading with this economy. And as they trade with this within the Ethereum economy, you'll need to hedge and plan and predict for the future, and you need a bond market equivalent, like a native bond market equivalent for that. And so this sets up the foundation for that, and very excited kind of move forward, set the path forward for more than doubling the amount of users who can access Ethereum. But let's have this chat a year from now and see where we are on that front.
Yes. And what do you feel is missing right now? Of course, besides distribution, besides liquidity, and actually moving more people on chain, in terms of tech, or in terms of, I don't know, having more financial primitives around Ethereum. What do you feel is missing for having Ethereum an economy of decentralized economy of its own, as you mentioned in your previous response?
Sure. So there's, I mean, the obvious question is like, oh, we need more real world applications and stuff like that. That's kind of like the standard answer, right? But Ethereum is best suited for, at least today, like financial markets, right? So from my perspective, it's creating the foundation for the rest of the financial markets, like the fixed income side, the bond markets, but crypto native, right? So that, I think, is the biggest unlock, because then in the future you'll be able to get like mortgages on chain, or like car loans or student loans, and like that world is huge, but it's not really possible yet on Ethereum. And so I think that's one of the core kind of like unlocks for a whole suite of products on that side of the equation. But I don't know, of course there's other applications, but I don't know, this is where I'm focused right now.
Yeah, sure, got it. We spoke a lot, almost the entire space so far. We spoke about Ethereum, ETHGas, of course, and everything around it. And I want to use an opportunity to speak about other blockchains. So how do you feel? Of course, I'm sure you did the research about the infrastructure of other chains, of course, Solana, of course, like other EVM chains catching up, or big non-EVM chains like Aptos and others. Do you feel that they have the same problem, or because they have like more decentralized more centralized nature, or they have already different approach to tag different frameworks, they won't benefit from the products such yours, and you feel that it's probably not so exciting market just because it's already fast, it is already scalable, and it's already works smoothly, and you try to stick with Ethereum because you're using disadvantages of Ethereum and your advantages, let's say, and or you think that there's a room for expansion and room for tools like yours on other chains as well?
Good question. I mean, Ethereum is big enough. I think the on the one hand, the unlock we would have for Ethereum as an ecosystem as a whole, like that's big and important. And down to my heart, like Ethereum is just like, it's so good. It's just slow and clunky, right? But so to the extent we could address like the slow and clunky part, Ethereum will, it'll be able to innovate and move really rapidly as a community and as a set of developers. In terms of other chains, they are other like ecosystems, and what we're doing can equally apply to those as well, especially the other like EVM chains. It's fairly straightforward to take what we're doing and just like add a drop down box and you'll be able to kind of do it in those ecosystems. It's a slightly different set of players in those ecosystems. The dynamics between the validators and the users and the traders is a little bit different. Yeah, but I mean, the mechanics are still the same. You know, we could take all the EVM chains tomorrow and make them real time. We just need the validators to opt in and say like, yes, I would like a real time experience because that'll drive more demand to my chain. But you know, that would be a wonderful future, of course, where
And many
we are
validators
perhaps
of EVM chains, they're also already known to you as a validators of Ethereum, I believe.
exactly right. So like, yeah, you have many on Ethereum who are on other chains, but then you also have many chains where the validators are quite like centralized under like a small set of people or a small set of certain types of people. Like you have some chains where it's all like trading firms, and that's a little different, right? Because they might all co-locate, and you know, there's different questions around like how resilient is this chain, how diversified is that validator set, excuse me, how censorship resistant is it also as well. But you know, again, what we're doing, it could apply to any chain. We might look at others in the future. Again, it's very easy for us to do it, but you know, we want to get Ethereum right and just kind of focus there for now.
Yeah, focus is extremely important, especially for Web3 companies. I think it's one of the things that are lacking a lot in the Web3 startups
Yeah. Well,
environment.
our name is also ETHGas. So I mean,
Yeah.
you tell me. I mean, could we do ETHGas on Solana,
L2s,
or like could we do
L2s,
it? Yeah, L2s, right? You know, but could we do it on like Binance? You know, but like
BNB gas.
BNB? Yeah, we could. Um, we'll see.
And as we touched other chains, and you said that potentially you can expand to the bigger, not to the bigger, but to the bigger set of blockchains
Yeah.
besides ETH itself. Can you tell more about your key plans for the ETHGas in the short term in terms of products, integrations, and partnerships? Of course, some of them at different points we mentioned already during the spaces, but probably something that our audience should keep an eye on, or something that you're really extremely excited about personally and can't wait to share with us.
Yeah, absolutely. So we've had our heads under a rock just building for like for quite a while, but you know, now is the time where um, you know, we're releasing our product to the public, and so actually coming back to your earlier question, yeah, we've just been working on the product, um, but yeah, you know, we're opening up our product now, but alongside that, um, we have a couple key goals, and we need you know our viewers or your viewers support to make this happen, and one of them is making a real-time Ethereum. And so if you want that, then you know, follow us, give us a shout, just kind of support us in general in terms of like, yes, I want a real-time Ethereum, that'll be a fantastic experience. Another part is just like, I don't want to pay for gas anymore, right? And so, you know, shout, talk to the protocols, talk to your friends, and like follow us and join our journey and supporting us on that front. Um, on that side, we will be oh well, we've just started kicking off a series of community building initiatives to basically ask for support in this initiative, and it involves, you know, following us and spreading the word around this story around creating like a gasless future. Um, and so we will be actively you know, engaging with and working with and, you know, potentially rewarding in some shape or form the users that really help us to kind of make this happen. And that could be like you, Peter, as an individual, or you, Peter, as a protocol builder that is, you know, on the marketing side or developer for ABC protocol, and you think like, hey, I think this gasless future initiative is something we should be fighting for. I'd like to support as well. And so, yeah, if you're a protocol builder or a user, um, yeah, please follow us, stay in the loop, and get involved. This is it's worth fighting for.
Yeah, 100%. And as we are fighting for the future of Ethereum and the decentralization, I think that especially your last sentences were very inspired by the original Ethereum vision, and it's kind of it see how it influenced you in a good way, in the
Yeah.
spirit of community, in the spirit of fair rights for everyone, and having
Hmm.
equal opportunities in Web3 for everyone. And of
Hmm.
course, one of the hottest things right now is adoption and getting more people in. And I ask a lot of founders right now these questions, especially founders who are building more on the infra side and on the crypto deep tech side. How would you explain ETHGas for a person who has nothing to do with crypto, like completely nothing?
Well, it's just innovation right at the fabric of the blockchain. So the most tangible thing is we create a real-time Ethereum experience, and we're getting you gas rebates. We're removing gas. That's the more tangible part of it, but we're really just innovating in the fabric of the block space itself.
Nice. Awesome. I will write it down and tell to all my normie friends why they have to follow ETHGas. If you want
Please
cashback,
do.
like this is
It's
where you
super
can.
simple. I mean, like I hope people would be invested in understanding some of the technology we're building, and like how are we able to achieve like what it is we're doing, and like that'd be awesome, right? But on the other side, not everyone has the time or effort or wherewithal to figure it out. So on the far other side of the spectrum, it's just like, I don't know what ETHGas does, but I get some money back every month, and that's fine,
Yeah.
right?
I
Like,
don't
and
I
that's
don't know
okay
how
too.
this tech works, but it's also, this like
Yeah, like you don't need
if
to. Yeah,
something goes up in crypto, the tech is great. If something
exactly.
goes down, the tech is very bad.
Yeah, yeah. I mean, we're not going to be taking money from you. I don't know how that would work, but yeah, the whole point is just like get your rebate, and there we go.
Awesome. Yeah. Thank you so much for this conversation. We're wrapping this
My
up.
pleasure,
Thank you
Peter.
so much, our community, ETHGas community, all the people who watch this live stream. Of course, this live stream also will be available on as a recording. You can always check it out after. And don't forget to follow ETHGas, check their website, check their upcoming community campaigns. Of course, follow Morningstar Ventures. We're coming to Korean Blockchain Week. We're coming to Singapore Token 2049. It would be great to
We
see
are
you all.
too. We'll see
Yes,
everyone there.
you can. See everyone there, and thank you so much. Thank you, Kevin, for coming today.
Again, thanks for having me, Peter.
Thank you.